What if I told you that the wealthiest people in the world, millionaires, billionaires, often pay less in taxes than the average 9-to-5 worker? And no, they're not criminals. They're not hiding from the law or running from the IRS. They're simply playing a different game. A game with rules most people never learn, but the rich have mastered. This video is going to pull back the curtain. We're revealing the strategies that allow the ultra-wealthy to legally reduce their taxes, sometimes down to zero. And if you stick around till the end, we'll uncover the one tactic that's so powerful, even the IRS can't touch it. Let's begin by understanding something fundamental. The rich don't earn money the same way you do. Most people go to work, earn a salary, and that income gets taxed at some of the highest rates. That's called earned income. Depending on where you live and how much you make, that could be anywhere from 20% to 40% in taxes right off the bat. But the rich, they avoid this trap almost entirely. Instead of earning salaries, they earn money through investments, things like stocks, real estate, and businesses. These types of income fall under what's called capital gains or business income, which are taxed at significantly lower rates. To give you an example, someone working a full-time job earning $100,000 a year might pay over $30,000 in taxes. Meanwhile, someone like Warren Buffett, who makes most of his money from investments, might pay closer to 17% on millions of dollars. In fact, Buffett has famously said, "I pay less tax than my secretary." That's not an accident, it's strategy. Now let's take it a step further. The rich don't just earn differently, they spend differently too. While most people earn money, get taxed on it, and then spend what's left, the wealthy often run their lives through corporations. Why? Because corporations have access to tax advantages individuals don't. A corporation can deduct expenses like travel, meals, even cars or home offices, as long as they're used for business. That means if a wealthy entrepreneur flies first class to attend a business meeting, that flight becomes a tax write-off. But if you take a vacation, you're paying for it with post-tax dollars. The difference is enormous. The rich, quite literally, live through their businesses. But there's one tactic that's especially mind-blowing, one most people have never even heard of. It's called buy, borrow, die. Let's say a billionaire owns $10 million in stock. If they sell that stock, they'll owe capital gains tax. But if they borrow against it, taking out a loan using their stocks as collateral, they get access to that money without triggering any tax. And because interest rates on these types of loans are low, it's actually cheaper than paying taxes. So they live off borrowed money, enjoy their wealth tax-free, and when they die, their heirs inherit the assets at a new, higher value, called a step-up in basis, which erases the tax liability entirely. It's completely legal, and it's how the wealthy stay wealthy across generations. And speaking of assets, one of the most tax-advantaged areas the rich love is real estate. When you buy a property, the IRS lets you claim something called depreciation. That's where you deduct the property's wear and tear over time, even if the value of the property is actually going up. It's a paper loss, but it lowers your taxable income. That means the rich can own multiple properties that generate cash flow and still show a loss on their taxes. On top of that, they use something called a 1031 exchange, which lets them sell a property and reinvest the proceeds into a bigger one without paying any capital gains tax. It's like trading up tax-free. But the strategies don't stop there. The ultra-rich often go a step further by moving their wealth into trusts and foundations. When they do this, they no longer technically own those assets. Instead, the trust does. But here's the kicker. They still control them. That means they reduce their estate taxes, increase privacy, and keep wealth within the family, all while limiting what the government can touch. Some families even set up private foundations, which allow them to donate money, reducing their taxable income, and still direct how those funds are used, often by hiring their own family members to run the foundation. Then, of course, we have offshore accounts and shell corporations. Now, let's be clear. This isn't about shady illegal activity or hidden treasure maps buried in some tropical tax haven. What we're talking about here is entirely legal and surprisingly common among the ultra-wealthy. Countries like the Cayman Islands, Ireland, Luxembourg, and Singapore offer extremely favorable tax environments, low corporate tax rates, minimal reporting requirements, and high levels of financial privacy. So, wealthy individuals and multinational corporations strategically shift profits to these jurisdictions to significantly reduce their tax burdens. It's called tax optimization, not evasion. The difference is critical. Tax evasion is illegal, hiding income, falsifying returns, breaking the law. But tax optimization? That's about using existing laws to your advantage. The rich don't just hand over money blindly, they hire elite teams of lawyers, accountants, and international advisors to carefully structure their income, businesses, and assets across borders. It might mean setting up shell corporations, entities that technically own parts of the business, to route money in the most tax-efficient way possible. By the time the profits return home, the tax liability is dramatically reduced, or in some cases, erased entirely. And it's not limited to James Bond villains or mega corporations. You'd be surprised how many celebrities, athletes, and entrepreneurs quietly benefit from these global setups. It's a financial chess game played at the highest level, and while you may not have billions to move around, the lesson remains the same. The wealthy don't just make money, they design the flow of money with precision and strategy. Now, all of this might sound distant, like something only billionaires can do, but here's the truth. You don't need millions to start thinking like the wealthy. You can apply the same mindset today. Start a side business. Even a small online store, consulting service, or freelance gig allows you to set up a business entity and begin leveraging tax deductions. Learn how capital gains work and how different types of income are taxed. Start investing, whether in index funds, dividend-paying stock, or a rental property. Every dollar you put to work in assets is a step away from trading time for money. When you invest, your money starts working for you, and those returns, when structured right, are often taxed far less than the income from a traditional job. It's not about working harder, it's about working smarter. The rules of the game are public. You just need to stop playing checkers while the wealthy play chess. Here's something else to consider. Even setting up a simple LLC or S-Corp for your side hustle can open the door to deductions you wouldn't have otherwise. Home office expenses, part of your internet bill, equipment, travel, all potentially deductible. You start to shift from being just a consumer to becoming a creator and owner. And ownership is where the leverage lives. Of course, learning all this doesn't happen overnight. The rich have teams of advisors and they spend years building these systems. But if you're willing to educate yourself, apply what you learn, and think a few moves ahead, you can start taking control of your financial future. Knowledge is leverage, and in the world of taxes, knowledge saves you money. So if this video opened your eyes, do yourself a favor. Hit that like button, subscribe to the channel, and turn on notifications so you never miss a new upload. Every week, we dive deep into the real-world strategies that the wealthy use to protect and grow their money. No fluff, no jargon, just straight-up knowledge delivered in plain English, designed for people like you who are ready to break free from the paycheck-to-paycheck cycle. Because let's be honest, the wealth code isn't a secret hidden in a vault somewhere. It's right in front of us, in tax laws, in business structures, and investment strategies that anyone can learn. But the system isn't designed to teach it in school. It's designed to reward those who take the time to understand how it works. That's what this channel is all about. We're not here to preach, we're here to empower. Whether you're just starting your journey or already building your wealth, the goal is simple. Make smarter moves with your money. We believe financial literacy is the most underrated superpower, and once you unlock it, everything changes. So stick around, dig through our other videos, and keep learning. Because the wealth code isn't just for the rich, it's for anyone bold enough to claim it. Until next time, don't just earn, build. Don't just work, own. And remember, the tax code isn't your enemy. It's a playbook. You just have to learn how to read it and then play to win.